Hello and welcome to the Daily Forex Report for January 20th. We're looking at the US-Japanese yen pair first. This pair moved strong to the upside, did close higher, overall moving sideways, biased sideways. Look for it to potentially go as high as 83.88 and as low as 81.58. Look for some resistance around 83.15 and look for some support around 82.32. Now the Euro-USD pair formed a doji bar today and an inside bar, definitely triggering notice for a breakout. Look for this pair to potentially go up and hit resistance around 135.40, possibly moving down to support at 133.65. Now the pound US dollar pair, this pair moved to the downside as well. This pair is starting to move sideways. We are looking for it to potentially go as high as 1.6088, possibly as low as 157.44. Look for some resistance around 160.58 and look for some support around 158.33. Now the US Swiss, this pair moved to the upside as well, closed higher, moving sideways overall. Look for this pair to potentially go as high as 0.9804, possibly as low as 0.9466. Look for some resistance around 0.9725 and look for some support around 0.9600. Now as far as news announcements go, we have the Canadian dollar releasing their retail sales for November, showing that that's being released at 8:30 a.m. Eastern Time. Consensus on this one is that it has dropped from 0.8% to 0.4%. Now I do have several different trades to look at. Let me go through them fairly quickly. We have the US-Japanese yen pair has created a swing trade opportunity. It is a fairly steep curve trend line that we have. Still, nonetheless, we have a potential for a breakout to the upside off of the break of this. Do have to worry about some levels here of potential resistance that we've seen previously, and just kind of show you what the potential is for this trade. Get a breakout to the upside. Probably the first area you're going to encounter about 12 pips up, then about 23 pips up, 22 pips, and then finally at around 43. So if you're just trying to grab a quick scalp, you'd want to take this 12 pips out of the market there. If you want to see if it'll go further, I definitely advise going to break even at that point once it crosses there. Now the pound US dollar pair, nothing really there. The US Swiss, same deal. We have a swing trade opportunity that's been created. Let's look at the trend line there. Potential areas of previous resistance. These are the two that I would look at to the upside. Have a little bit more room than the yen, about 25 pips or so, 28 pips, and then on up to about 60 pips. So a little bit better as far as the movement. Now the Euro-USD, let's talk about it real quick. It formed a doji bar, closed 1 pip down, basically. Also created an inside bar. To the upside, I'm not super excited about it. To the downside, we have some opportunity. Look for previous areas of support that we'd want to take a look at. We have this area as well. If you notice here, over here, the low, we have lows and lows. So potentially it could go down to that point. That would be a pretty strong move of about 225 pips, but you can see we do have those days. The fact that we have an inside bar and a doji bar doesn't guarantee a reversal, but it definitely is something to look at. We have 52 pips to the first area of support, previous support that we'd look for possibly to kick in, then at 75 and then down at 115. These would be great places to look to sell short at 133.65. then at this point exit part of your lots, or possibly go to break even, and then another exit, and then another exit, looking for it to come down here and then have a final exit at this point. If you have this triggered, I drop down to say the hour time frame and look, leave these levels on and look to see what the market action does. Another way to play this is to grab your Fibonacci retracement levels and then grab your Fibonacci fan. And now you can see how this corresponds with our previous areas of support. They're fairly close together. Some are closer than others. I'm going to go ahead and remove those so that we can get a clearer picture as far as our Fibonacci lines. Basically, we'd look for a break of this yellow line. So we look for a break of it and sell short and look for it to come down and either hit this line or this line. So for entry, you're looking basically for a break of these two lines, and then for an exit, you're looking for these two lines. That way, if the market comes down, you have a potential to exit. If it takes too long time-wise, then this 50 line can really get you out of the market and save you on a trade that may just be going back and forth. That's about a 78 pip move there. So there's two ways to play that one. Pick whichever one you want, and at that point you can trade it accordingly. Until next time, this is Jason Fielder. Good trading.